But what caused the financial success was not extreme ability. And I've had results in life that are prodigious. And that came from tricks. I just learned a few basic tricks.
The legendary Charlie Munger, otherwise known as Warren Buffett's right-hand man, often says that exceptional intelligence was not the reason for his financial success. He owes all his results in investing to several brain tricks and behavior patterns meant to help him avoid silly mistakes and accumulate billions of dollars in capital. In this video, Charlie is going to cover 4 of these techniques. Starting off with the most powerful and unexpected technique, the ability to invert the problem that needs to be solved.
There are all kinds of tricks that I just got into by accident in life. One I invert all the time. And I was a weather forecaster when I was in the Air Corps. And how did I handle my new assignment? Being a weather forecaster in the Air Corps is a lot like being a doctor that reads x-rays. It's a pretty solitary. You're in the hangar in the middle of the night and drawing weather maps and you're clearing pilots, but you're not interfacing with a bunch of your fellow men very much. And so I figured out the minute I was actually making weather forecasts for real pilots, I said, how can I kill these pilots? Now that's not the question that most people would ask, but I want to know what the easiest way to kill them would be so I could avoid it. And so I thought it through in reverse that way, and I finally figured out, I said, there are only 2 ways I'm ever going to, I was in the ferry command, there are only 2 ways I'm going to kill a pilot. So I'm going to get him at icing his plane can't handle, and that will kill him. Or I'm going to get him someplace where he's going to run out of gas before he can land because all the airports are sucked in. And I just was fanatic about avoiding those 2 hazards. It's like a lot of practical problems in algebra. If you invert, you can solve it easily. If you don't, you can't solve it easily.
Exactly right.
And so, of course, I had that trick very early. And most people would say, please tell us what you do to save India, or to help India. And of course, I would approach it differently. I'd say, what could I do which would most easily hurt India? And approaching it in reverse that way, I got better results.
You look at the vulnerabilities.
Yes, and I have a whole bag of tricks like that.
Inversion is an excellent tool for any area of life, including stock market investments. Oftentimes, investors focus on finding stocks they believe will make a profit, but most people miss the second half of the equation though. Make sure the company you're betting on doesn't turn out to be a flop. Remember the first rule of investing: don't lose money. Therefore, in addition to why would these stocks rise question, you should also ask yourself an equally important one: why might these stocks fall in value? Believe it or not, but it's the latter question that brings the most benefits for long-term investing. No less valuable mental model Munger is using on a regular basis lies in the concept of humility, or the knowing what you don't know model.
But if humility means that you know the edge of your own competency, and you aren't arrogantly stepping over the boundary, I'm very good at that.
Yeah, well, I'd redefine humility as knowing what you don't know.
Yes, well, both Warren and I are very good at that. One of these guys at the Berkshire meeting from one of the foreign publications said, why do a couple of guys in a little place in Omaha do so much better than all these powerful minds in great institutions? And I said, well, I think Warren and I know the edge of our competency better than other people do. Warren frequently says, I'd rather deal with a guy with an IQ of 130 who thinks it's 125 than a guy with an IQ of 180 that thinks it's 200. That second guy will kill you.
You don't need to know about many things while investing. You just need to know a few areas like the back of your hand. Awareness of your limits might help avoid unsuccessful investments.
Specialization is the safest way up for most people. And for that reason, say surgeons know more and more about less and less. And that's what gets rewarded. And if you have a nasty fistula in your colon, you do not want a surgeon who's good at Proust or political science. It's understandable how the world rewards this specialization. The safe way up is to know a hell of a lot about something
Warren Buffett knows the ins and outs of insurance business. Ray Dalio is well aware of macroeconomics. Benjamin Graham was no stranger to distressed business. Charlie himself has a strong sense of understanding the Chinese market. All of these iconic investors knew a lot about small topics, instead of knowing a bit about huge topics. You better define your competencies and delve even deeper into the areas of business you already have a knack of, rather than diving headfirst into every available opportunity. This leads us to Munger's third trick. Charlie encourages staying rational enough not to be affected by temporary fluctuations in a stock market.
How worried are you by the declines in the share price of Berkshire Hathaway, the difficulties the
Zero.
company's in?
This
No?
is the third time that Warren and I have seen our holdings in Berkshire go down top tick to bottom tick by 50%. I think it's in the nature of long-term shareholding with the normal vicissitudes in worldly outcomes and in markets. The long-term holder has his quoted value of his stock go down and then by, say, 50%. In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50% 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
Both Munger and Buffett possess an uncanny ability to stay focused on the long-term run and be prepared for the market's wild swinging. If you're not ready to handle a temporary 50% drawdown in your portfolio, you shouldn't be engaged in investing. Give your a thumb up for this video and subscribe to this channel if you are tempered enough not to sell shares like a panic monger. As soon as you have mastered the cold-blooded approach to the matter, move on to the fourth trick, according to which you should strive for simplicity in choosing stocks. Give priority to companies whose business is simple and reliable.
We have a very peculiar way of looking at things. We want to buy something that's intrinsically a very good business, meaning that an idiot could run it and it would do all right. And then we want that business which an idiot could run successfully to have a wonderful person in it running it. And if we have a wonderful business with a wonderful person running it, that really turns us on and it works very well. And now we do make exceptions, but not many. And it's a pretty simple philosophy. Warren sometimes says you have to choose good person or good business. He wants something that has such tremendous strength. I had a friend when I practiced law and he said, if it won't stand a little mismanagement, it's not much of a business. We like businesses that stand a lot of mismanagement but don't get it. So that's our formula. And we can't make it work perfectly, but it certainly worked better than most people's.
The perfect business area you should aim to invest in must be simple and clear, have a strong competitive advantage, and can be run by anyone. As Charlie says, if it won't stand a bit of mismanagement, then it isn't much of a business. Share in the comments below what trick you would prefer to use in the near future. Leave a like if you enjoyed today's episode, give us a subscribe, and check out our other videos.